Hello and welcome. I'm Jeremy McDougall from ACI Worldwide, and today we're diving into how payments are being engineered in real time and why it matters more than ever. Across the payments landscape, we're seeing powerful convergence of instant payments, digital currencies, AI, and a once-in-a-generation transformation of the UK's core infrastructure. But beyond the headlines and the hype, what's really changing? Where is real value being added? And what does it mean for consumers, banks and building societies, and the wider economy? In this episode, we'll explore those questions through both a global and UK lenses, drawing on insight from ACI's 40-year partnership with Nationwide Building Society to uncover what's practical, what's proven, and what's next. I'm delighted to be joined by two industry leaders at the heart of this transformation: Tom Warsop, President and CEO of ACI, and Otto Benz, Customer Technology and Payments Director at Nationwide Building Society. Tom, Otto, welcome.
Thank you very much, Jeremy.
So before we get into the technology and the trends, I'd love to start with a bit of a personal question. Payments is something that only seems to get picked up when something goes wrong, but is so fundamental to our everyday lives. I'd love to hear from you what drew you to payments firstly, and what's kept you here for so long. And Tom, I might start with you.
Sure. So I guess if I think back in my career, I've been somehow connected to payments for at least 35 years. And I think the exciting thing about payments and financial services generally, it's what makes the world go. I mean, we can't do much of anything without payments, and we have to, from getting our morning coffee to making sure that we have a place to live to whatever you can think of, it's all revolving around how do we exchange value, and that's changed a lot over the years. We're going to talk about some of the trends that are happening now, but I think back to actually, Jeremy, you and I were talking earlier about checks, and you made me think about my children. My daughters have never written a check in their entire lives. The only reason they know what they are is because once in a while their grandmother would give them a gift at their birthday, and they said, "What do I do with this?" But I think it's a dynamic business. It's absolutely critical to the economy, to the way we live, and making payments work better is a really exciting thing. I think we're doing something good for the economy and helping the world grow faster and be a better place to be.
Thank you. And Otto, if I could ask you the same question.
Sure, yeah. I guess I've been involved in payments and clearing and settlement and things like that also since the late 90s. Similarly, I've always found it fun to do payments. I think there's a kind of a technology thing associated with it, and then there's the business thing, which Tom already mentions. From a technology perspective, I've always been attracted because it's quite challenging, actually. People want to make a payment immediately, and even if they don't want to, you need to have the capability to cope with really high transaction throughput, and very, very high resilience. So the technical challenges associated with that, I think, are really interesting. Plus, you do get to help people with their daily lives, and it's actually quite meaningful. So both of those, really, for me, that was why I got into it. And once you get into something, you kind of stick with it, and you stay there, and you just keep getting asked to do more of it. So you kind of stick with it.
Yeah, that's interesting. You're talking about the complexity and the way that when you think about the global economy and the needs, which it's accelerated a lot in the 30 plus years the two of us have been in this business, the volume and simplicity of cross-border payments, for example, has changed dramatically. Because I remember as a kid, I needed to send some money to a relative in Scandinavia, and I just remember it being this massive headache to get it done. And it was very expensive as
Yeah.
well. And now it's relatively straightforward and it's getting easier as we go. And I think that's one of the great things is
And
that complexity creates
yeah.
jobs for you and me, for one
Yeah.
thing, and opportunity, but also uh, solving those problems and making it easier is really exciting.
And on that point, Tom, it does feel like we're in a constant transformation when it comes to payments, and we're always looking at the next thing. Um, but I know that not all change is equal. So, do you have a view on what feels different right now, where we are now, compared to, say, previous waves of innovation? And do you have a view on, this moment now, what's different?
Yeah, I think there are many things that are different. There's so many things happening in the world right now that are people are probably tired of hearing the word unprecedented, but these are new things that are happening. But I think we have this convergence of new or much better technologies combined with the maybe regulation in many parts of the world that's a little bit less restrictive. So there's more opportunity to do innovative and new things, combined with the openness of younger generations to doing things differently and actually, in fact, demanding to do things differently. I was mentioning my daughter's never having written a check.
Yeah.
They've never, as far as I know, my younger daughter has never visited a bank branch in her
She
life.
doesn't know what she's missing.
So well, exactly. I mean, she might get a free pen or a cup of coffee, but my point on that is not about that. It's about the expectations that she has and her peers have about the ease of doing business and the choice that she demands. She wants to pay the way she wants to pay, and she wants it, as Otto said, she wants it to be immediate. She does not want to wait 3 days for a payment to clear, or she wants to pay
Yeah.
her friend and she doesn't want to use cash because she doesn't probably know how to get cash, and but she wants to do it now. So
Yeah.
she has various ways of doing that. So I think this combination of expectation or demand plus technology plus a regulatory environment that's a little bit less restrictive has created a completely new set of opportunities. And I would say that with all the change that's happening, one of the things that that I think is interesting about payments is if I think back over my life, as far as I know, no payment method that I've ever used has gone away. We keep getting new ones, but the old one, like cash, I told someone last year, they said, well, cash surely is dying. I said, yeah.
Yeah.
To paraphrase Mark Twain, the death of cash has been greatly exaggerated because there's a lot of cash still in the economy, and so the trick is, how do they coexist? How do you interoperate with
Yeah.
those? Because it's not like you can say, okay, everything next week is going to be stablecoin. I get asked that all the time.
Yeah.
No, that is not going to happen. There will be new ways, but you got to support all of them.
Okay. And Otto, on a similar theme, from a UK lens, what pressures and expectations do you think are most shaping how building societies and banks are thinking about payments today and in the future?
Yeah, it's interesting, isn't it? I mean, Tom, you're right about saying that nothing goes away. I always look at it from a UK banking perspective, and you need to be able to cater for, depending on how you count, 7, 8 different mechanisms, and that's just today. So none of them vanish. You need to have backs, 3-day mechanism, because that's how people pull subscriptions or salary payments across the country. Faster payments have been nearly 20 years since that's been live, so account to account is not exactly new in the UK. We've still got checks, although check imaging is a push mechanism now, and it's overnight, and it's the newest mechanism, interestingly.
Mhm.
You got to have Visa or MasterCard. You got to have Link. You have support for international. You can have support for high value with chaps. Depending on where you are, you might have a euro connection, and that's just now. And then you have all of the new, potentially new mechanisms that are envisaged with digital payments and stablecoins and so on. The multiplicity of keeping all of that running is a major issue, and it's a major investment. And I think when you're involved in providing retail consumer banking services or business services, the need to support multiple is an interesting question, because each one of them is expected to interoperate, although they don't. They're all expected to operate on a uniform basis. They have different characteristics, and the increasing consumer demand for real time mechanisms really makes a difference in expectation. And when you look at it, the UK's account-to-account mechanism, faster payments, it's absolutely brilliant, and it's worked massively reliably for 20 years, and nobody thinks any different of it.
Yeah.
But it's not the same as a card mechanism. It doesn't provide the same characteristics, and if you want to try and do exactly the same thing with it, you can't.
So, Otto, on that point, why bother upgrading faster payments and go through a lot of activity and time and effort and upgrade the system?
So I think you've got to manage, in a large country like the UK, the consumer expectation and meet it. It's really important to support the economy. It's really important to support people's daily lives. There are disadvantages of using card mechanisms.
Yeah.
If you listen to the retailing industry and business demand, that there are complaints around the way those things work, how fast payments are made to merchants, how consumer protection is managed, and there is a push to account payments, for push payments, where you can control, where the consumer controls the payment itself. Credit risk is managed by the consumer, because it's their choice whether to make the payment. So you can see that there are advantages of moving to a push mechanism. But you need to do more than just the mechanism. You need to look at what's the consumer protection environment. Are you going to support that by some kind of agreement? Are you going to let the consumer go out there and talk to the merchant directly if they get the wrong product, or is the bank or building society or financial institution going to step in and help? And none of those things are fixed, and neither are they sorted. And there's a lot of disagreement, I think, in the industry about that too. So it's not just the infrastructure that needs upgrading, but it's how you handle that across the scheme.
Okay. And Tom, the last time we spoke, you said something that really stuck with me. It was, the biggest questions in payments are not technical, they're strategic. Yeah. Could you elaborate on that?
Yeah, I think it actually plays into what Otto was just saying. It's the technology to make. Let me use a real example. If I think about cross-border payments, and Otto was mentioning faster payments in the UK, you could think about UPI in India, PIX in Brazil, pick your poison. Technologically, moving or having a payment originate in one of those platforms or programs and end up in another, technologically, not a problem. ISO 20022, same standard, no problem. The problem is the regulators haven't agreed on how it works, number one. And then there's not yet a framework for consumer protection. Otto, you were just talking about that. So if I want to send money to a friend in Brazil, it's still a relatively complicated thing, even though both of us may have an instant payments account, which technologically could easily be connected. But we've got to get through. So it's not the technology often. Sometimes it is, but
Yeah.
often it isn't. It's something else. It's a regulatory environment. It's a cultural environment.
Okay.
It's just an agreement. How do we reach agreement? And so, a lot of times I'm asked, well, when are we ever going to have the technology to do A, B, or C? We've got that,
Yeah.
but there's still a lot of work to do.
Okay. We've touched on some key themes already. There's hot topics in the market. We've talked about instant or real-time payments, but I wouldn't mind checking with real-time payments. Otto, you've mentioned the UK has been established. We were at the forefront of that innovation. Do you think there's much more to go when we talk about real-time payments and instant payments? Do you think we reached our peak that 20 years ago, or do you feel there's further use cases? And from the UK, is there more to come in the real-time payment space?
Oh yes, absolutely. I mean, you faster payments continues to grow at about 10 to 15% a year, and that's partially at the expense of cash, partially at the expense of other mechanisms. And I think the the interesting thing about the UK is we do have consumer protection, but it's currently only about fraud. So you have authorized push payment fraud protection, and ultimately, that's now shared between the two financial institutions. The sending and receiving one. So if you're a victim of a socially engineered fraud, the recipient also has to have some interest in protecting the victim on this, which I think is absolutely right. The problem, of course, is that once you push the burden of protection, if you like, onto the financial institutions, where do they go? Right? Do you actually make it easier or harder to make a payment? And from our perspective, like, in that regulatory environment, Tom, which you mentioned, certainly in the UK, you can just see that expanding, right? And you can see the issue of protection not going away. I mean, at the moment, with card mechanisms, you sit there and you are protected with chargebacks, with the card schemes, and you're protected with credit cards, with Section 75 protection. But when you make an open banking payment to go and buy something, you authorize it. There is no protection that the banks or building societies or financial institutions provide.
Okay.
You have to claim against the company. And I find it hard to think that will be allowed to continue, because you can only really see the environment becoming harder.
Okay.
And in some respects, it's not a surprise, right? And you talk about PIX and you talk about UPI in India. Those environments don't have that level of protection on payments. So there's a kind of a false comparison quite often being made. People push for immediate payments on the belief that they should be free, right? But it's not free to anybody, right? It's not free to the company making the payment.
Yeah.
It's not free for the protection. It's not free for the merchant. It's not free to provide the goods. So where does the protection come in that? And until we have either voluntarily agreed schemes around commerce protection, or regulated ones, I find that that will still be a problem.
Okay.
But because it's cheaper, or apparently cheaper, the demand is there.
Yeah.
To move to it on the basis that chargebacks are really expensive, and who wants them anyway? Well, yes, they're expensive and they're clunky and they have rules, and maybe they're over the top. But you've got to have some agreement about who's going to protect the payment, or either against commercial problems or other issues or fraud.
Okay.
So you're either going to have that or you're not, and somebody's got to pay for that.
Plenty of scope to move forward.
Actually, Jeremy and I were talking about it's not the same issue you're bringing up, but there's a connection. So I really like the idea of transparency in terms of costs of whatever transaction you're doing. So let's take payments. You were just talking about it. There's a demand because it's free, but it's not free. Right? There's cost associated. Now, who bears that cost? That's a different discussion, but there are costs. So someone brought up buy now, pay later to me recently, and this is what we were talking about this morning. And oftentimes I'll hear from a consumer, well, this, I can spread my payments and it doesn't cost me anything. zero rate. And I always say, no, hold on. It's not free. There is a cost. You may not bear it, but somebody is. So the merchant is funding it typically, or it's split between merchant and someone else, but it isn't free. And there is definitely a cost. Do you think people? I mean, that would be like somebody standing out on the road saying, "Here's a 100-pound note. Would you like it?" I mean, that's free, but
to
I
someone.
haven't found that. I haven't found that recently.
Tom, on the cost part, and it moves me on to cross-border payments. In the UK, we're 20 years in for faster payments. As a consumer, I can make a faster payments. It's mobile, it's instant. In the past, and I've tried to send money to the US. And what always struck me as bizarre, it wasn't so much it will take 2 days to get there, but there was no guarantee on the principal reaching the beneficiary. So my bank would say, "Oh, would you like to cover the cost, or would you like the beneficiary? Would you like to split it?" And I thought, I don't know, but and where's the guarantee of it getting there in 2 days, or would you like to pay more? I know we've come on a long way in cross-border, but Tom, would you say how far are we from, as a consumer, me being in a place where on my mobile or my method of making payment, that I can make that cross-border payment to Brazil that you mentioned just as seamless as I could do an instant payment?
Yeah, I think we don't have that ease at the moment in most cases. But I think, as I was saying before, it's not that we don't have the technology; it's we don't have the right agreements and the policies and the structure of how we get it done. So I don't know. I won't make a prediction about when that will be possible, but you're starting to see situations where you actually can do that. So I'll give you a real world example. Between Singapore and India, there is an agreement. UPI works with the Singapore Immediate Payments Program, and so you can actually make payments across those two borders. The reason that is possible is the central banks agreed. This is how it will work. Here's how we're going to protect the consumer to a limited extent. Here's the counterparty risk. We're going to deal with that. Foreign exchange, not a big issue. They sorted that out. So now you can do it. But right now, what we're seeing is some limited situations where that is quite seamless. But I don't think that's what you're asking. You were saying, how can I send money anywhere in the world, make a payment? I don't know. It's certainly possible. It should happen. It will happen. I don't know.
Okay.
I wish I did know.
Otto, do you have a view? And I guess as nationwide, I know you're involved in industry collaborations. Is there anything from a cross-border point of view you would like to add?
Yeah. I mean, look, there's lots of new mechanisms, but there is complexity, right? And it's around trust and who takes the risk, who takes the settlement risk and the counterparty risk and the timing. And are you covered as a financial institution for the payment that you're making on behalf of your customer? So you kind of solve that in a domestic arrangement by having a scheme which you either agree to belong to or are mandated to belong to, where you uphold certain levels of standard around the customer and the settlement. And we don't sit in a world now where it has to take 3 days and you only give the customer value on day 3. You give the customer value immediately, and then we agree to settle later. Right? I'm not sure that it's particularly easy to move into that world, into an international world, and agree that for all counterparties and all endpoints. It's too risky. Right? Who do you trust? Somebody's got to take the foreign exchange risk. You might make certain arrangements on certain currencies, which make it easier. But I don't think this is an overnight matter. But if you ask SWIFT, they'll tell you that the vast majority of
Reach the
eligible
beneficiary
payments
bank within
within seconds. Right, so the messaging is not the issue. It is actually, as Tom
the
says,
settlement.
the settlement and the agreements that go around it.
Okay.
So I think yes, we can do, but there's still a way to go.
Okay. No payments discussion or podcast would be complete without the topic of AI. But what I want to ask is, where is AI making a difference within payments? And do you feel there's room for improvement right now? Otto, I'll maybe stay with you for that one.
Yeah. I mean, AI has a number of domains, doesn't it? You kind of look at your personal productivity with, Copilot or what have you, or OpenAI, and ask it questions. There's a lot of work going on in software development and improving and speeding up the software development life cycle. And then you can look at the actual end-to-end process and whether you can radically change it. And I think you see improvements happening in all of those spaces. At Nationwide, we certainly, you look at the developers and whether you agree to it or not, they're using the capability and they're taking benefit from it. And it's quicker to take requirements into development. It's quicker to get functioning and productive code, and it's more reliable testing. And those things are great because you can develop new capabilities more quickly and serve your customers better. And then you look at the actual end-to-end process. You look at what Visa and MasterCard are doing, for example, on Agentic. Are you going to enable customers to sit there at their AI and let them choose a jumper and then say, off you go and buy it? But you do have to ask yourself the question again around, what's the framework? Who gets it? If you get it wrong, who's at fault, right? If that agent goes off and makes a payment and then the customer says they didn't authorize it, who covers that?
Yeah.
Right? Is it the merchant for sending something and not getting paid? Well, that would be unfair.
Yeah.
Is it the bank? Well, they got an instruction which apparently was authorized, right?
Yeah.
Is it the AI company? Is it the scheme?
And I believe certainly in the UK, the Mills review that's coming out later in the summer, that should hopefully give some clarity on some of these points you've raised.
But surely it must be. I mean, I know this is a silly thing to say must be because it's never the case, but it feels so straightforward that you created that agent. That agent is you. And that's how the bank sees it, right?
Well,
they can't really tell.
I don't know. I mean, the bank only sees an authorized payment, and
Right.
you have step-up authentication, and you ask, is that really, really you? Did you really make the payment? Right? But you still don't have the customer that says, well, I didn't get what I wanted. I want my money back.
Yeah.
Right? And that might be legitimate, and it might not. Who knows, right?
And if the customer's authorized the agent's done something, well, you logically think, well, I've instructed the agent. Why should my building society be the one who bears that?
Yeah.
But they tend to.
Right. That's what I'm saying. I mean, I know it's not as simple as that, but I think of it a little bit like power of attorney. Right? You're giving maybe it's a bad way to think about it, but if I create an agent and say, okay, agent, go purchase these things on my behalf.
You're delegating the authority.
I think I just authorized it to do that.
You think that the American companies in the nicest possible way, Tom, that create all of these agentic solutions are going to take the liability for payments
No, I
made
don't.
in the
Not
UK?
at all. Not at all.
I don't think they are.
Not at all. No, I think the individual that created the agent. So me, I create an agent. I'm giving my agent the authority to purchase on my behalf. That's how I see it.
We shall see.
I'm with you. I think that's a very simplistic way of looking at it, but I think it's the right way.
The card schemes are trying to push, will provide some clarity in that space, and I think that's a good thing.
Yeah.
But I think we're not there yet.
No.
But actually, I do see, within the wider payments landscape, you can see AI having an impact in, smoothing out the customer experience. You can see it helping consumers actually decide try to communicate that they've got a problem with the payment they've made, and the types of tools and conversational mechanisms help with that. And you can see improvements within our organization, for example, in the back office, how to automate, how to improve the quality of what we're doing, and you can see AI really making a difference in the process improvement world on an end-to-end basis.
Yeah.
Right? So I think it has a massive role of potential to improve how we do things. I guess the really interesting question is how much will it all cost? Because I definitely get the impression that there's been a lot of investment in data centers and RAM and all the technology, and the true costs of that haven't necessarily all been passed out. but they will do it at some point.
Yeah.
Of course.
So if you're dependent on it and you have no idea what it costs, it will be an interesting experience for the financial institutions to cope with that, I think.
And it's interesting how I'd say agentic commerce, or AI, whatever the right term is, now is getting so much discussion that when you go to discussions like this or conferences, I would actually say it's either on par or almost overtaking the stablecoin discussion, which we know comes up in every discussion. If we move to the future of money, terms like stablecoins, tokenized deposits, CBDCs, they're often used together, but they're different in practice. Tom, if I come to you around the future of money, stablecoins, tokenized deposits, and CBDCs, they're often discussed together, but we know they're different in practice. How should existing banks, building societies, and consumers, what should they be doing about it?
Yeah. So you're absolutely right. Often I will be asked a very big question that says, "What do you think about all of what you just said? All CBDC, stablecoin, crypto, generally, tokenized deposit. What do you think about that?" Like it's one thing. They're not. They're different. They all are. They have common themes. They are digital currencies. For the most part, they rely on blockchain technology, so they have something in common, but they all have different use cases. And I think at the end of the day, what we were talking about before applies here. They'll all exist, and there will be uses for each one of them, but to lump them all together and say, I often get asked, they'll just lump it as stablecoin. What do you think about stablecoin, and when is that going to take off in the United States as a domestic payment mechanism? It's not.
Okay.
Well, it will be there, but is it going to be a primary mechanism? I don't think so, because it's solving a different problem. So it's a big question, and I think it comes back to what we talked about before. All of these will exist. They need to coexist. Some of them need to interoperate. I guess they all eventually need to interoperate. But those are different things, and I think it actually points out that it's confusing. This is a complicated world, and when you keep adding new payment mechanisms, it becomes more complicated. And so, helping, especially if I think from a consumer perspective, helping consumers understand which mechanism makes the most sense for them, there's a lot of value there.
Okay. Thank you, Tom. So if I move on, Payments Unleashed in New York, it marked ACI's 50th anniversary last year. It was a big milestone. Tom, what stood out to you from that event, not just as a celebration, but a signal of where the industry's heading? And what are you looking forward to most for Payments Unleashed in EMEA on the 30th of June?
Yeah, absolutely. It was, first of all, it was an amazing event. We had some of our very best customers and partners, like Otto, were participants, and I think the thing was, as I just said, this is a complex world, and it's getting more complex all the time, and huge opportunities, some risks, some big uncertainties, and it was a forum that brought together real expertise, people that really understand payments and financial services, and we were able to have a dialogue repeatedly about where might things go, what do we need to think about, and I will say that I probably learned more in a couple of days than I have in a long time, because that's the way we set it up, and I would expect a similar thing here in the UK in a couple of weeks. Different set of characters participating, but the same idea. We're going to all learn together. And Otto, I know you were there, and we appreciated your participation. And what was your perspective?
Well, I thought one of the most interesting things was to compare the little video from Christine Lagarde, and where she was espousing the benefits of a European central bank digital currency, and David Malpass, who was espousing the benefits of dollarization on an extraterritorial basis by American institutions, which I thought was a completely different, to your point earlier, a completely different vision of digital currencies.
Yeah.
From two very important and senior players across the world. I sit here in the UK and I wonder about both of those things. I wonder around the relevance of a so-called central bank digital currency, because if it's not on my balance sheet, I'm not sure what interest I have in paying for it.
Right.
Because most of the way we do our business is a much more traditional, deposits and lending type organization. So, again, if it's all free and there's no transactional fee and you don't get deposits, why would you? And I think also from a stablecoin perspective, we look at the way some of those things work, with the dollar, and you can see why that's a massive benefit to certain parts of the world and certain use cases. And it is all in the use case. What is it for? Why are you doing a payment? And I think for me, that's kind of sums it up. Why are we actually, to take it back to your first question, Jeremy, why are we in this industry? We're in this industry really to facilitate people doing their normal day-to-day business in a way that makes it convenient for them, and in a way that is not overly risky or dangerous and protects them.
Well, I can't wait to continue the conversation at Payments Unleashed EMEA. I could talk about this all day, as you can tell. Sadly, we are going to finish. But before we do, I just want to ask you one final question, and really briefly, what lessons from your journey in payments still feel relevant no matter how much things have evolved?
Well, I think for me, it's what I tell my teams is when you go and do an implementation, the only good thing is if nobody notices. Right, because ultimately people don't go out there to make a payment. They go out there to buy something, or they go out there to fund something, or to get some benefit from it, or to give it away for some other purpose. So, making it seamless and making it reliable has been like the overriding feature of my journey through payments in the last 30 years or so.
Okay. And finally, Tom.
Yeah, I'd say I totally agree with that point. Payments have to happen. They have to go. You have to be able to trust that when I say the money needs to go to Jeremy, it goes to Jeremy. So I totally agree with that. Resilience, reliability, absolutely. I'd say for me, it's about the what we've talked about a couple of different ways today. No payment mechanism ever goes away. So the key is, how do you create the right level of support to facilitate that choice that we've both mentioned, and how do you make sure that you can deliver that variety of payment mechanisms at that super high quality level? So the reliability and the resiliency, because just because you add a new payment mechanism doesn't mean you'll take less reliability on the old one. Absolutely not. And so the whole thing becomes more complex, and you got to think that all through. And as you implement, as Otto just said, we don't want anybody to notice.
Yeah.
And the only way you don't notice is it just happens.
Thank you, Tom. Well, that brings us to the end of our discussion. What is clear is that payments, they're not just evolving, they're being fundamentally re-engineered in real time. But what we've heard today is that the real story isn't the technology itself, it's the trust, resilience, and the partnerships that make it all work in the real world. Tom, Otto, it's been a pleasure speaking to you today, and thank you to everyone watching and listening.
Thanks, Jeremy.
Thanks.
Thank you.